Have you ever wondered why some people seem to effortlessly accumulate wealth while others struggle financially despite working equally hard? This question has puzzled many for generations. The answer often lies in their understanding and management of assets and liabilities. Those who prosper have a keen sense of financial literacy. This fundamental difference in financial literacy can make all the difference between a life of prosperity and a constant struggle to make ends meet. It's not just about earning money but about managing it wisely. Many people believe that a high income is the key to wealth. But this is a misconception. High earnings can help, but they are not the sole factor. True wealth is not about how much money you earn, but about how much money you keep, and how effectively you put it to work for you. It's about making smart financial decisions. It's about understanding the financial game and making your money work for you, not the other way around. This requires knowledge and strategic planning. The key to bridging this financial divide is to adopt a wealth-building mindset. This means thinking long-term and focusing on sustainable growth. This involves shifting your focus from simply earning money to acquiring assets that generate passive income and appreciate in value over time. It's about building a portfolio of income-generating assets. By understanding the principles of assets and liabilities, you can begin to build a solid foundation for long-term financial success. This knowledge is the cornerstone of financial independence. The terms assets and liabilities are often used in financial circles, but their true meaning can be elusive to many. In simple terms, an asset is anything that puts money into your pocket, while a liability is anything that takes money out of your pocket. This fundamental difference is crucial to understanding how wealth is built. Think of it like a game of cash flow. Assets are like star players on your team, constantly generating income and increasing your net worth. Liabilities, on the other hand, are like expenses that drain your resources and hold you back financially. To build wealth, you need to assemble a winning team of assets and minimize the impact of liabilities. By consistently acquiring assets and managing your liabilities effectively, you can create a positive cash flow that fuels your financial growth. This concept is at the heart of building long-term wealth and achieving financial freedom. Real estate, when approached strategically, can be a powerful engine for wealth creation. It offers a unique combination of cash flow, appreciation potential, and tax advantages that can significantly enhance your financial well-being. However, it's essential to remember that not all real estate is created equal. Consider rental properties. Each month, rent payments from tenants flow into your account, providing a steady stream of passive income. As property values rise over time, your initial investment appreciates, building equity and increasing your net worth. This combination of cash flow and appreciation makes rental properties a popular choice for investors seeking long-term wealth. Other examples of real estate assets include land that appreciates in value, real estate investment trusts, REITs, that provide dividends, and vacation rentals or Airbnb properties that generate short-term income. By carefully selecting and managing these assets, you can create a portfolio of income-producing properties that contribute to your financial success. While real estate can be a path to wealth, it's crucial to recognize that not all property investments are created equal. Some properties can significantly enhance your financial standing, while others can become a financial drain. Just as there are assets that put money in your pocket, there are liabilities that can drain your finances and hinder your financial progress. Understanding the difference between the two is essential for making informed investment decisions. Failing to distinguish between the two can lead to costly mistakes. These mistakes can have long-term repercussions on your financial health and stability. One common example is an unaffordable house. This can be a property that looks appealing but is beyond your financial reach. While owning a home is often considered a positive step, stretching your budget too thin to purchase a property beyond your means can quickly turn into a financial burden. This can lead to stress and financial strain. High mortgage payments, property taxes, and maintenance costs can create a significant drain on your cash flow, leaving you with less money to invest in income-generating assets. These ongoing expenses can add up quickly. Other examples of real estate liabilities include properties that require constant expensive repairs, which can be both time-consuming and costly. Vacant properties that generate no income while still incurring expenses can also be a significant financial drain. These properties can sit idle for months or even years, and properties located in areas with high property taxes and fees can further erode your financial resources. These costs can be surprisingly high and difficult to manage. These liabilities can quickly erode your wealth and hinder your financial progress. Being aware of these potential pitfalls is crucial for anyone looking to invest in real estate. Asset or liability? The defining question. In the world of finance, the ability to distinguish between an asset and a liability is paramount. This distinction can make or break your financial health. It's not about what something is called, but about how it functions within your personal financial ecosystem. The true nature of an asset or liability lies in its impact on your cash flow. A seemingly valuable possession can quickly transform into a financial burden if it consistently drains your resources instead of adding to them. This is a common pitfall for many. The defining question to ask yourself is simple yet powerful. Does this put money in my pocket or take money out? This question can guide your financial decisions. If it generates income or appreciates in value over time, it's likely an asset. Real estate, for example, can be a great asset if managed well. If it requires ongoing expenses without providing a financial return, it's likely a liability. This is true for many high-maintenance properties. Remember, this principle applies to all areas of your finances, not just real estate. Diversifying your portfolio can help balance assets and liabilities. A car, for instance, is typically a liability as it depreciates in value and incurs expenses like insurance, fuel, and maintenance. These costs add up over time. However, if you use that car for a ride-sharing service, it can become an asset by generating income. This transforms its role in your financial ecosystem. The key is to analyze your expenses and investments through the lens of cash flow. Understanding this can lead to better financial decisions and a healthier financial future. Turning the tables, transforming liabilities into assets. The good news is that with a bit of creativity and strategic thinking, it's possible to transform certain liabilities into assets. This process often involves finding ways to generate income from an expense or reducing its overall cost. Let's take the example of a large house that has become a financial burden. One option could be to rent out spare bedrooms, generating income that can cover a portion of the mortgage and other expenses. Alternatively, you could consider downsizing to a smaller, more affordable property, freeing up capital to invest elsewhere. Remember, the goal is to shift the balance of your finances so that your assets outweigh your liabilities. By actively seeking opportunities to turn liabilities into assets, you can accelerate your wealth-building journey and create a more secure financial future. The power of smart investing. Smart investing is not about gambling on risky ventures or trying to time the market. It's about making informed decisions based on sound financial principles and a long-term perspective. It's about understanding the difference between assets and liabilities and consistently choosing assets that align with your financial goals. One of the most effective ways to build wealth is to develop a habit of regular investing, even if it's with small amounts. The power of compound interest, often referred to as the eighth wonder of the world, can work its magic over time, turning small, consistent investments into a substantial nest egg. Remember, investing is a marathon, not a sprint. It's about making calculated decisions, being patient, and staying the course even when markets fluctuate. By embracing the principles of smart investing, you can create a solid foundation for lasting financial well-being. The path to financial freedom. The journey to financial freedom is a personal one, and the definition of success varies from person to person. For some, it might mean achieving financial independence, where passive income covers all their expenses. For others, it might mean having the flexibility to pursue their passions without financial constraints. Regardless of your definition, the path to financial freedom often involves similar principles: living below your means, saving diligently, investing wisely, and constantly seeking opportunities to increase your financial literacy. It's about taking control of your finances and making conscious choices that align with your long-term goals. Remember, financial freedom is not a destination but a journey. It's an ongoing process of learning, adapting, and making informed decisions that empower you to live life on your own terms. By embracing the principles of sound financial management and consistently striving for improvement, you can create a brighter financial future for yourself and your loved ones. Conclusion. Your journey to financial well-being. The journey to financial well-being starts with a clear understanding of the fundamental difference between assets and liabilities. By consistently seeking opportunities to acquire assets that generate income and appreciate in value, while minimizing liabilities that drain your resources, you can set yourself on the path to financial success. Remember, every financial decision you make, from the property you purchase to the investments you choose, should be driven by the question, does this put money in my pocket or take money out? By making this simple yet powerful question a guiding principle in your financial life, you can navigate the complexities of the financial world with confidence and clarity. Your financial well-being is within your reach. Embrace the principles of smart financial management, make informed decisions, and watch as your financial future brightens with each step you take.